We've been joined in the studio live by Mr. Vijay Bambwani, author and CEO of BSPLindia.com. And Sumit Bagadia also joins us on the link. He's Associate Director at Choice Broking. Vijay, let me come to you first. We've seen, all central banks act in the last 7 to 10 days. And the more important ones of them being, of course, the FOMC, and the possibility of a December rate hike is pretty much alive. Bank of England has hiked rates. ECB has indicated their decision to unwind gradually. So the liquidity tap is indicated to wind down by and by. Your views on what impact could this have on the dollar index over a longer period of time, as well as on industrial metals?
Good afternoon, Pranoy. Thanks for having me on your show. You rightly said the liquidity tap is now tightening, and you've also seen the unemployment data from the US clearly very supportive of the economy and the dollar, therefore. And if the dollar is likely to get bullish, if interest rates are likely to go up, it is bound to have a slight drag on gold prices, because gold is seen as a hedge against inflation, as a hedge against an economic slowdown and a safe haven buying. I think slowly but surely, and this is something that we discussed even in the Diwali show, hard assets or commodities are clearly seeing a pro-cyclical risk on returning to the market. So I think it's likely to be industrial metals rather than the precious metals which are likely to outperform the markets in the absolute near term.
Right. Sumit, let me get you in on this then. And let's start with what your call on silver is. You have a buy call on silver, and this is more near term, with a target of 40,100 to 40,400. So take us through that. And what's your view on gold? Because we've remained kind of mostly unchanged, under $1,300. So I suppose we're close to 1275, 1276 odd.
Hi, good afternoon, Pranay. Well, yes, immediately after the correction, now it seems that the commodities are taking some breather, and from here on there is a possibility that we might see some upside take. As far as your question on silver is concerned, there is a possibility that silver can give move of around 600 to 800 points from present levels. Upside move of 600 to 800 points. One can initiate long positions in silver December contract at around 39,500, 39,600 levels, with a small stop loss to be placed at around 39,200 levels on lower side for the upside target of 40,100 levels. And if 40,100 is taken away, then we can see extended move till 40,400 levels in next 2 to 3 days time horizon. Till that time, 39,000, 39,200 levels are not taken away. One should avoid selling position in silver, and in fact, one should initiate, and if there is any tip of around 100 to 200 points, then that should be used as a buying opportunity for the targets of 4,400 levels in next couple of days. As far as gold is concerned, from high levels, we have seen some selling pressure in gold, but overall, I think till the time 28,900 or 29,000 levels are not taken away on gold, it's better to avoid short positions. There is a possibility that we might see upside move of around 200 to 300 points in next couple of days. So for a trading perspective, one should initiate long positions in gold also.
All right, so a positive view coming through on precious metals, at least for the shorter term. Mr. Bambwani, let me speak to about crude then, because that's clearly a positive surprise. I mean, positive for some, but could be viewed the other way around as well. We are holding above the $60 per barrel level, and the moment we scaled it, we've not gone down below it materially. Does this give you some sense that, maybe the futures participants are confident of a gradual base forming at 60? Could we go even higher from here?
Yes, I think so, Pranoy. And this is something that I've been repeatedly saying on your show. Let's take these cues where the bullishness is coming from. The Saudi king visiting Russia personally, and the Russians are no small exporters in the global oil sweepstakes. The Russians signing a $30 billion deal with the Iranian oil company. The Russians tying up with the Chinese to supply long-term contracts of crude in the market here. And now the Chinese making an offer to the Saudis for a 5% private placement in Aramco. These are very clear indicators that now the stakeholders in the crude export markets are in concert to try and stabilize or even boost prices higher. Let's not forget the US is now an exporter of crude oil. So earlier, being an importer, it wanted lower oil prices. Now as an exporter, it will want higher oil prices. So net-net, I do think crude is likely to rally higher. And like you rightly pointed out, once it's making highs, barring those small blip downs, It's not really reacting very deeply. There are no deep cuts in prices. So it's a buy on dips market.
All right, a buy on dips market as far as crude oil is concerned. Sumit, you have a buy call as well. You have a target of 3,600 to 3,650. What's the time horizon for this? And till what time will you wait buy and see sustaining above the $54 per barrel level on WTI and 60 on Brent?
Crude is looking strong. In last couple of days, we have seen a very good upside move from the levels of $45, $47. We have seen upside move in crude, WTI crude I'm talking about, in which we have seen levels of around $53, $54. Now, immediately from here on, there is a possibility that we might see extended move till $57 or $58. I feel that crude is strong, and from here on, there is a possibility that we might see a upside move in crude M6 November contract, in which we can see a move around 100 to 150 points from present levels. Immediately, with a small surplus of 34.90, one can initiate trading bet in crude November contract at 35.30, 35.40 levels for the upside target of 3,600 and 3,650 levels. This is a trading bet for next 2 to 3 days time horizon.
Okay, Mr. Bambwani, what do you feel about the gap between WTI and Brent? I mean, David Lennox from Fat Profits just spoke to him. He seems to believe that this could sustain for even longer. What's your view? Is this the new normal?
Well, it's been the normal since a while now, and I do expect that the gap is likely to maintain throughout 2017, maybe even 2018, at least part of 2018. But with the US turning a net exporter, I feel the gap might just narrow a bit. Let's not forget, up to 2013, WTI crude was trading at a premium to Brent. And now that you've seen a reversal, the Americans are likely to pay catch up because they'll want higher realization for their export output. So I do expect, and I would bet that the difference would actually contract rather than maintain, or in the unlikely scenario of expansion.
All right, let's speak about industrial metals then. It seems to be an interesting time because not only are those gains sustaining, but we also in this week have had important base metals companies as well as steel companies report numbers. For steel, it seems to have been a kind of stable quarter, subdued on a sequential basis, but the Indian performance of steel players has been holding out. At least operationally, the EBITDA per ton seems to be decent enough and hasn't fallen very sharply. It's been quite stable. But as far as base metals go, I mean, we've seen Hindustan Zinc numbers. I mean, clearly the LME price is a one-for-one benefit, so that has helped them out. In terms of the treating and refining charges, as we see for copper, that seems to be holding out. So at least earnings-wise, these companies are doing well. Mr. Bambwani, what do you have to say about aluminium? Because, if you talk about individual companies, the costs of alumina matter, the costs of caustic soda matter, but how is the end price of aluminium looking like? Do you think that aluminium could be the metal to watch out for over the next year? And do you think that we could get as strong gains from zinc that we have seen over the last 1 year to at least continue?
I think so, Pranoy. As I've been maintaining on your channel, I am fairly bullish on industrial metals. And once the winter plays out and the summer months actually start, industrial output or factory stocking in the West, which is kind of covered with snow during the winter months, and after the thaw comes in, they start to buy base metals. So if in the winter months, these non-ferrous metals, which have actually been outperforming the ferrous metals, do maintain their ground, I think higher prices are up in store for us. And where aluminium is concerned, we are now at almost a decade high. And I do expect that these highs will hold. Declines are rather shallow, and therefore I do expect that falls will get bought into. And should the winter months see no serious declines in prices, I think clearly 2018 belongs to the non-ferrous industrial metals up ahead.
All right, 2018 belonging to non-ferrous industrial metals. So that seems to be the view coming from Mr. Vijay Bambwani. But let's speak about nickel. I mean, in this week, it has seen the strongest rally compared to its other peers. Sumit, you have a buy call there with a target of 850 to 860. I mean, has essentially nickel played catch up to other industrial metals? And for how long could this, up move continue?
Well, most of the base metals are looking good to me. We have seen a good upside move in copper, zinc, lead, nickel, aluminum, and all the commodities in all the base metals stack. And now, immediately looking at the chart, it seems that the same move can continue for next couple of weeks, or in fact, I should say, for next couple of months, because still the charts are looking strong. And from here on, there is a possibility that we might see a move around 5 to 7% easily. As far as the question on nickel is concerned, yes, we have given a buy call in nickel November contract at the current market price. If there is a dip of around 10 to 15 points, then that should be used as a buying opportunity. Downside immediately, from a trading perspective, 790 is support, so one should have stop loss at around 790 levels. For the upside target of 850, 860 levels, these are the immediate targets for nickel. And if by chance these levels are taken away, then we can see extended move till 900 levels also. For a trading perspective, one can initiate long with a stop loss to be placed at 790 for the targets of 850 and 860 levels.
Fair point. Mr. Bambani, if we speak about nickel, I mean, it's very sensitive to stainless steel pricing as well in both China as well as India. So from that standpoint, do you see more positivity, and what's your view specific to nickel?
Pranoy, we talked about nickel in the Diwali special show, and that time it was approximately 730 odd levels, and we've seen a 100 rupee jump. And I did maintain nickel, as far as I'm concerned, remained my favored metal to watch out for in the coming Samvat. I would stick my neck out and say that nickel is likely to basically perform head and shoulders above its peers in the non-ferrous industrial metal space. And yes, you can't make stainless steel without adding nickel to the iron. And therefore, as pro-cyclicality or pickup in the economic activity gathers steam and gathers traction, nickel is likely to run ahead on stronger legs. So I would agree with you that nickel is a buy on dips market, and it's underperformed where it's currently placed. Look at aluminium, 10-year highs, zinc, more than 10-year highs, copper, multi-year highs, but nickel is only at 2.5-year highs. So there's a lot of catch-up in nickel still left, and the rally does have a lot of steam in it.
Right, and before we close out on the show, your favorite Dr. Copper, what happens to that?
I think copper has done fairly well in the last 6 months, and I would look at some amount of consolidation, a little bit of a breather, if you may. And rallies are likely to be somewhat slower in the absolute near term. But 2018 and beyond, if you're looking for electrification in the economy, you can't do it without copper. So copper will remain Dr. Copper, the barometer of the industrial economy. But in the absolute near term, I am a little iffy about going gung-ho and all guns firing on it on the long side.